the focus is more on what are the strategies. Let's put products and services on the side or investments on the side for a second and identify what are the things that are actually going to move the needle. 99.9% of the population, they think that the financial advisor is going to help them with taxes and investments and everything else. And instead of focusing to say, okay, what do the ultra wealthy do? How do the ultra wealthy invest? How do they file for taxes? How do they plan for taxes?
Albert Einstein, he said, singularly, the most important thing was not E equals MC squared, it was compound interest and the magic of compounding. Pay your future self first and live below your means.
Challenge the status quo. Ask questions and ask lots of them. If you have a question and it's top of mind, chances are that question is super relevant to your future wealth. The answer might give you some additional insights that you did not previously have. Do you want your money to be doing a little bit of nothing, or do you want to put it, at least part of the money, in asset classes that provide you some validation from the downturns in the market?
What are the top 3 to 5 things successful sales reps should focus on to build wealth during their prime earning years?
Well, congratulations to them first and foremost, because
you are listening to the Best Sellers Podcast presented by Doug Dvorak, where the focus is elevating your sales boom. The Best Sellers Podcast, your ultimate destination for winning sales strategies.
Good day, Best Sellers Podcast Nation. Hi, I'm Doug Dvorak, founder and managing principal of the Sales Coaching Institute, and your host for the Best Sellers Podcast, where we explore cutting-edge ideas on sales excellence, sales training. Today, my high esteemed and honored guest is Eunicia Peret, managing partner with Excelstra Wealth Strategy Consulting firm in Atlanta, Georgia. Welcome, Eunicia.
Doug, it's such a pleasure to be here with you and all of your amazing listeners.
Thank you so much. Well, I am so excited, and I know my listeners will be. I did some research on the topic of earnings for top sales professionals. And according to Indeed, the average base salary for a sales professional and outside account executive is $75,000 plus commissions. Some of the top earners make in excess of $250,000. So money management, wealth management, financial advice should be top of mind for those sales professionals who are in their peak earning years. Eunicia, can you share with our listeners what is the difference between a financial advisor or financial planner and what you do as a wealth strategist?
You know, Doug, I absolutely love that question because we get it so often. Anytime we're in a new circle of individuals or networking event, I always get asked the question of, oh, you're doing financial planning. And it's like, no. We work with financial planners and we work with CPAs and we work with attorneys, but really what we do is we transcend the gamut between 3 different industries, if you were to think about it, while at the same time we're bolstering the support that the client gets with the right support from each one of those industries. So because we're kind of industry agnostic, our biggest focus is to ensure that the client is positioned to minimize to the extent possible their tax exposure, to make sure that they're very cognizant of what are the different solutions that they have at their disposal when it comes to how, when, why, where money is invested. And then last but not least, to also figure out this question of, from an exit strategy planning perspective, what does that look like? Whether we're talking about selling a business, whether we're talking about somebody just wanting to retire, or whether we're talking about somebody just having the question of, will my assets be okay when I leave this earth? And so when we're thinking about just this idea of wealth strategists versus what the industry calls financial advisors or even wealth planners, we're looking at if you were to think of financial advisor, most of the individuals will kind of have access to those guys and gals, right? They go in, they walk through an office, somebody tells them, here's what you invest in. And so the focus really is more on investment and products. Whereas with the wealth strategy consulting firm, the focus is more on what are the strategies. Let's put products and services on the side or investments on the side for a second and identify what are the things that are actually going to move the needle. The other thing is the idea that, frankly, 99.9% of the population, where do they go when they want to invest money? They think that the financial advisor is going to help them with, taxes and investments and everything else. When the reality is that all they do is they basically sell from a book of business. And instead of focusing to say, okay, what do the ultra wealthy do? how do the ultra wealthy invest? How do they file for taxes? How do they plan for taxes? We keep falling back into the situation where everybody else does the same thing. And then last but not least, when we're thinking about, let's just say products and specific investments are still good for individuals. What's the difference between the two? In one, you're basically buying off of a predefined menu. Unless you're over $10 million, and for some institutions even higher, you will never really truly get access to expert advice. It's going to be what you get because that's what you get. And so if we were to say there's nothing wrong, right or wrong about either one of them, the big question is, do you want to purchase a list of things from a predefined menu, or do you want to have outside of the box thinking where you're not just working with the one individual, but you're working and you're ensuring that your broader team is collaborating? And then the other thing that I would say is a huge differentiating factor, and this is where truly Excelstra comes to play, is this idea of the quarterback approach. It's a terminology that we've used ever since really the beginning of our time as a company, because in what we do, we don't pretend that we know it all. That's why we make sure that we collaborate with the client's financial team. So our claim to fame is, if as an individual, somebody already has a CPA, already has a financial planner, financial advisor, whatever the title, already has an attorney, let's make sure that everybody collaborates together. And frankly, sometimes we figure out that we might have the right people on the bus or we don't have the right people on the bus. And then the next question is, how do we make sure that we have the right team that will enable us to think, again, like the ultra wealthy, not the rest of the population?
Excellent information, data, and advice. I early on in my career had a relationship with a couple of financial advisors, and not to disparage financial advisors, some are excellent. But when I look at my statements, I was always, he was moving my money every quarter. And I really, I was paying commissions, and it was, to your point, it was a menu of products. And some of those just were horrible investments. They weren't investments. And I really like your strategic, holistic team approach. The next question I'm going to ask, but prior to answering it, I remember my mother when I started off in sales at 22. I was making about $20,000 a year, and she said, "Open a 401k or an IRA." And I did, and I put $25 in it. At that point in time, that was a lot of money for me 40 years ago. And I think back to the magic of compounding and how by having access to a wealth and financial experts such as yourself, it's really the long game. And I think about what was asked of Albert Einstein on his deathbed. Albert, what were the most important things you learned? He said, singularly, the most important thing was not E equals MC squared. It was compound interest and the magic of compounding. So that leads me to my second question. Why is it important to focus on wealth optimization sooner rather than later?
Well, there are many, many factors to that. And yes, compound interest is one of the big ones. So if we can probably just put it out there first and foremost. But why, right? A lot of people will say, well, if I can just get even an extra percentage point next year, it'll be fine. And they keep putting it off. And the reality is that the earlier we do things and we do them correctly, the better hygiene that we get into to say, you know what, I'm going to pay myself first. Outside of the W-2, outside of the 1099, outside of what you may take out of your take-home pay, what are you doing to pay your future self? Because the reality is, we were at Excelstra, we work with a lot of individuals typically that are going to be in 40s and into their 50s, where there's already wealth accumulated. And here's what I will tell you that we see, Doug. Unfortunately, and all too often, we're having to realign and assess what are the things that could have and should have been done earlier on. And it pains me every time I have to be the bearer of bad news to a client, because we show our client, here's the good, the bad, and the ugly. And here's what I'll tell you. In 99.999% of the cases, when a client comes to us, their current reality is the ugliest of our ugliest. Why? Because we're kind of going back to the difference between the two, but I feel like it's really, really important. It just came to mind is one of the things, and you mentioned this earlier, is things were sold to you, there's commission, there was transactions that you couldn't explain. The reality is that as an industry, and we're not throwing mud at it, but that's the reality. As an industry, people are incentivized to sell. I mean, listen, those individuals, that's their job. So we're talking to successful salespeople. Financial advisors are salespeople, right? And so when we looked at, okay, what does that look like? A big component of it is how do we minimize the cost? And so if we're thinking about compound interest and we start earlier on and we do things right, starting earlier in life, magic truly does happen. I have this conversation with our kids all the time, and our children are younger. And I happen to have shown them one of their accounts. It was a few months ago. And my son quoted to me last night. He said, but you know, mommy, if I need to pay you back, I will totally pay you. Don't worry about it. You told me that I have X amount of money in that one account, and I'll just give it back to you. Now, the kids are not exactly funding these accounts themselves. We are. But because we started them young, they're automatically thinking every time we buy something or they have a wish or desire, the first question is, do you want this trinket, or would you much rather have preferred to have that money and seeing it grow? And so if we can start earlier on, especially in our 20s, I wish I could turn time back, but we can't, unfortunately. So we won't look back on the past with regret. But wherever you are, if you're listening or as you're listening to this podcast, wherever you are, if you're already doing something amazing, get some support and ask yourself the question, can you do even better? And if you haven't already started taking care of your wealth for the long run, again, get some support and ask the question of what can I do and how can you continue to increase that bar? Because at the end of the day, you're not doing it for anybody else, parentheses. As long as it is structured to your benefit, you're not doing it for somebody else, close parentheses. The focus should be on you and your future self and your future family. And then the other thing is opportunity cost, which goes hand in hand with the compound interest. If you don't, for anybody that is not starting early on and early enough and they're not doing the right things, that opportunity cost for most of the individuals that come to us, typically we're looking at recouping millions of dollars. If we were to look backwards at all of the losses, we're talking about hundreds of thousands of dollars, if not millions. Of course, we're working with a different type of clientele. But that's the reality, is that opportunity cost times the compound or with the compound on top of it leads to a lot of heartaches if we were to look back and say, okay, what could we have done better? So the earlier we start, we're going to minimize the opportunity cost. We're going to increase the opportunity to take advantage of the compound interest and truly see better wealth in the long run.
I love that. And I love what you said. I wrote it down. Pay your future self first. And what you don't see, you don't spend. And live below your means and be mindful, be intentional about those purchases, because it's amazing 2, 3, 5, 10 years down the line when we have that discipline and we do save, it's amazing what can happen. What are some other areas of mistakes that people beyond what you just shared with us are making or not doing to increase their net worth and their wealth?
So oftentimes, and we talked a little bit about this, is people rely on guidance that they get from other individuals in their network, be it mom, be it dad, be it uncle, aunt, cousin, neighbor, whoever. And oftentimes we don't take a step back to challenge the status quo, to say, okay, I had this conversation with a husband and wife. They were both physicians years ago. And when they came to us, they said, we look at what mom and dad, our parents had done, their parents, and they're both physicians on both sides. And the question was a very natural question was, well, you're looking at what they've done. Are you happy with what they've achieved, or would you like to achieve something different? And the response was, we'd like to achieve something different. We've talked to the people that they talked to. We feel that they could have been in a different place. And when we talked about, okay, here's how you can think about things differently. By the way, personally, we're not like everybody else. But the reality is, when we look at the actual value, we're going to blow your socks off. And the response was, this is amazing. We would like to take a minute and go back and talk to mom and dad. And this was years ago. I was floored, Doug, because we're sitting there and we're talking about not liking what mom and dad had achieved. But we want to go back because that's what we know as the status quo. So that little story is to say, please allow yourself to challenge the status quo. Ask questions and ask lots of them. It's one of the things that I encourage everybody that I talk to. If you have a question and it's top of mind, chances are that question is super relevant to your future wealth. either because it's going to, the answer might redirect you on a different path, or because the answer might give you some additional insights that you did not previously have. But too many individuals, because they're relying on that external validation, they forget or they stifle the questions. In the end game, when they're looking back 20, 30 years down the road, they can't help but say, I wish I would have known this sooner. Well, here's the thing. I too wish I would have known Eunicia, and I too wish that there was a concept like Excelstra when I was in corporate America, making a lot of money, paying a lot in taxes, and really not optimizing how I built my wealth because I didn't know how. But we're not going to look back with regrets. As I said earlier, we have to look forward towards the future. We just need the right support. And without the right support, unfortunately, the costs are just compounding and staggering.
Interesting. There's a lot of press today on VUCA, V-U-C-A, volatility, uncertainty, complexity, and ambiguity. And if I look on the last 30 years of my career in investing, I had the Asian financial crisis in 97, dot-com bubble, 9/11, the global financial crisis in 2008, and then the pandemic, geopolitical issues, and wars. Any ideas, suggestions, thoughts, strategies in investing for wealth accumulation and increasing one's wealth in a world of VUCA with geopolitics, volatility, uncertainty, complexity, and ambiguity?
Absolutely. Whether it's VUCA or we're talking about the VIX index or we're talking about just volatility in general, the answer is yes, Doug. There are solutions out there. Unfortunately, some of those solutions, again, going back to the industry as a whole, are not exactly popular. And the reason they're not popular is because, frankly, they don't pay out as much as keeping the money in places where the money's most exposed to all of the volatility. And so whenever we talk, as an example, whenever we talk and I speak with clients, that one of the questions is, okay, do you want your money to be doing a little bit of nothing, maybe just keep it in a savings account and hope that it's going to be okay? Do you want to put it on the roller coaster, or do you want to put it, at least part of the money, in asset classes that provide you some validation from the downturns in the market? And listen, those can be things such as non-traditional investments, as well as investments that are part of the financial services in general. But again, they're not exactly popular because of the way that they pay. And 9 out of 10 times, maybe even 9.9 out of 10 times, we have a lot of 99.9% kind of a thing. Individuals will say, well, I want that, but I've never heard about what that is. And so that's part of the magic. Whenever people have, what you had was an amazing question that so many other people are asking themselves, what can I do to minimize my exposure, at least for part of the money? Because if we do that, then listen, put half of the money one way and put half of the money on the other side. And you know that you're ultimately going to be a lot more balanced than if you just saw everything in a round pie and with a lot of colors. But because individuals don't have visibility into those solutions, they keep doing what they've always done. And because they do what they've always done, they're going to get results like they would have already always gotten. They're not going to be truly outside of the box.
That reminds me of the definition of insanity, doing the same thing over and over and expecting different results. And I think back to one of the best investors ever, Warren Buffett. He said, I've got 2 rules. 1, don't lose money. And rule number 2, don't forget rule number 1. So really that capital, not only appreciation, but capital preservation. And I think back to the crypto craze, and I didn't participate in crypto, just not my thing. But I had some friends, they were exuberant on how much they made, and then it crashed and they lost everything, and they bought more and more and more. So, not chasing that shiny financial object, but really, to your point and your strategy, having a trusted wealth advisor and strategist, that quarterback approach that brings a team a holistic approach.
We have to have checks and balances, Doug. And unfortunately, individuals across the different industries that I talked about, right? We're talking about accounting, we're talking about financial advisory, we're talking about even legal. The legal, not so much, because they're going to want to know more. But the other two, oftentimes what a CPA might tell you versus what a financial advisor might tell you, they can actually be counteracting in terms of actual strategies or the benefits that you're getting. So without those checks and balances, what we're seeing is that too many individuals are literally allowing money to siphon through the cracks, and they don't know where it's going because it's not easy to see. It just kind of siphons. And unless you know where are those potential gaps and those potential holes. It's just that.
Excellent. So most of the listeners to the Best Sellers podcast are the top 5% of sales professionals worldwide that are making a lot of money. They're in their 30s or 40s. What are the top 3 to 5 things successful sales reps should focus on to build wealth during their prime earning years?
Well, congratulations to them first and foremost, because the reality is if you're in the top 5%, chances are you're probably making more money than most CEOs and most presidents, even of different companies. Why? Because at the end of the day, you are truly at the one behind the driving force of what drives revenues to the companies that you're working for. So as you're thinking about, you're listening to this podcast and you're thinking about, well, gee, I'm in my 30s. I still have time. I just started making a lot of money. We'll be good. The income's going to continue growing. Here's what I'll tell you. We don't ever know what tomorrow holds. What I tell my clients all the time is you have to focus on where you are today. Don't focus on, well, next year my income is going to be higher by X percent, and I'm going to take that money and I'm going to invest it. I'm going to do this, that, and the other. To your point from earlier, Doug, whether it's $25 or it's $250 or it's $2,500 or it's $25,000, whatever that number looks like for you, start setting it aside earlier. During your current earning years, don't be thinking about the future because listen, maybe next year something major changes. If you start focusing earlier on, your future career decisions are going to be that much easier. And the reason behind that is because having that peace of mind from a financial standpoint carries a lot of weight. And I'll tell you as an example, we work with a lot of physicians, a lot of very highly skilled doctors. And listen, it really doesn't matter how much money you make at the end of the day. Everyone has questions when it comes to their financial situation. Are we going to be okay? Have we missed the boat? Should we have done something different? Should we be doing something different? And what I can tell you is that the individuals that started earlier, even when they didn't have the huge income, are the individuals that have the hygiene, financially speaking, to say, you know what, they can flex. If more money comes in, they'll put more aside. If less money comes in, here's a little insider. They're probably still going to want to put the money aside. They're going to figure out a way how to pay themselves first. Why? Because once your accounts start building up, you're not going to want to go backwards unless truly you need to touch that money because you need bread on your table. But here's the thing. You're professionals, you're out there and you're doing the absolute best that you can for your company. You're bringing in a lot of revenue. The likelihood, unless God forbid something happens where you're not able to get out there in front of people, the likelihood that you won't have revenue coming in is infinitely small. So put the fears aside. Start focusing on what you need to focus on today. And whether it's small or bigger, just know that the more you can focus on having consistency, those are some of the things that are going to drive you towards better future outcomes.
Interesting. I read a Psychology Today article on the top 5 stressors that Americans are experiencing, but people worldwide: death, illness, divorce, moving, and finances, money. And as we are getting older, there's risk to the Social Security pension. Some experts look that it could be tapped out at 2035, that people will then have to take a 20 to 30% hit on their Social Security. But financial independence, which leads to peace of mind, which reminds me of a quote that I often cite: an honest person's pillow is peace of mind. And that financial peace of mind, by taking some of your great advice, starting earlier, pay yourself first, live below your means, having that discipline, but also aligning with a wealth management expert like yourself to take the stress and the risk out of those big decisions. I have a wealth advisor that we've had a 20-year relationship with. I don't want to manage my own money. It's too stressful, and that is not my lane. My lane is speaking, sales coaching, and sales training. Professionals don't cost, they pay.
Absolutely. And don't think of the money that you might spend on yourself actually having an expert or an expert team on your side as a cost. think of it as an investment, because at the end of the day, if it's truly executed strategically the way that it should be, part of why we do what we do, is you're going to see a huge multiplier, a huge return on that investment. And at the end of the day, if you could put $1 aside and get several more out of it outside of just growing your money, wouldn't that be nice? And unfortunately, that's just something that's not popular. It's not what we see out there. And frankly, the reality is that it's kind of the onus is back on the individual, to your point from earlier, Doug, whether it be Social Security or it be investments or it be whatever it is that you are either afraid or what you would prefer not to have done on your own. You either do it on your own, or you make sure that you have somebody in your corner to transcend the gamut and be able to see all of those different blind spots that unfortunately there's no book to say, here are all the things that as a consumer you can and you should be able to spot, without having someone to say, yep, and on the backside of how things are designed, here's what that looks like. And here's what, again, the good, the bad, and the ugly. Our clients love that just because it gives them visibility into, my gosh, it is possible.
Excellent. Eunicia, this has been awesome, and I know it's going to resonate with our listeners. Eunicia, if somebody would like to get a hold of you at Excelstra Wealth Strategy Consulting, how can they get a hold of you, and what would be a first step in their journey to financial independence and getting some great wealth strategy advice from you?
I love that question. It's super easy. They can find Eunicia Peret on all the social media. We're also under Excelstra. You can also go to our website, www.excelstra, to make it easy, excelstra.com. And just reach out to us and let's book a call and address any questions that you have. I'm sure that if you're listening to this and if you're interested to chat, you probably have a laundry list of questions. Let's address them so that you at least have a path forward to know, okay, which direction do I go? How do I think about this?
Excellent. My guest has been Eunicia Peret, managing partner with Excelstra Wealth Strategy Consulting firm. Great, valuable information. Thank you so much, Eunicia. And thank you, Best Sellers Podcast Nation. Please visit us online at salescoach.us/podcast or call me at 847-359-6969 or email me at doug@dougdvorak.com, DOUG@DOUGDVORAK. Thanks so very much, and carpe diem. If you made it all the way here, thank you for listening to the Best Sellers Podcast, your ultimate destination for winning sales strategy. We hope you loved this episode. Be sure to subscribe to us on YouTube and follow us on your favorite podcast platform to never miss an episode. See you on the next one.